We are just going to see about the market concepts and mechanisms, because you would be seeing like this on your, like for example, if you're using any kind of exchange, you will be seeing OI, ask quantity, ask bid, and or delta volume. Like you can see, right, volume, delta, gamma, vega, you can see everything, like 24 hours low, high, and everything. So for this, you need to understand the basics concepts of what they're just given, because without knowing this, you can't know what they are just saying by seeing the data. So let's see this. First one is volume. So if you see a volume, like for example, let me go with an example. See, this is the volume part. You can see the volume, right? 70 million, 37 million, 26 million, like that you are seeing, right? So what it indicates is people are really participating inside. So that's what the volume is there. In that, you need to know few things. So number of option contract traded during this specific period, that will be taken in the volume. So it will show indirectly or directly that participants are interested. For example, if you want to know in depth how much they interested is, see here in at the money, nearly $100 million are there. In OTM, you can see in this type price 31 million, and if you go here it's 3770. So if you see at the money, like OTM and at the money, compared to this, if you see huge amount of volume is there in some contract or some strike price, you can make sure that people are bidding so much of money that money, like market will go up, or it won't be, go outside of ATM after this price, like market will be floating on this price level. So that's what they indirectly they're representing. So what it will show is, it's indirectly showing a lot of participants are interested on this type price. So it will show like a lot of volumes are there and a lot of contracts are buying and selling is happening. Same time, a lot of peoples are on that strike price compared to other strike price in OTM. Because in at the money, most of the time, if you see at the money, lot of money will be flowing in at the money. I'm not saying at the money is like this or that. In at the money, you can see a lot of money compared to other things. But if you see something more than that in out of the money or at the money, it means that people are thinking market can go out of this and it can go inside. So like that, they have some plan so that they just trading a lot. So that's the meaning. So if you see the volume, it means that it indicates that a lot of participants are inside. A lower volume, lower participants, a higher volume, higher participants, so that you won't face any illiquid issue. And next one is OI. So OI is nothing but the total number of outstanding contract not yet settled, expired, or exceeded. For example, if you see increase when a new contracts are created, decrease when closed or expired. So OI data is nothing but if any new contract is created, or any contract is righted, or any contract is sold by the seller, then it will be considered as OI. So OI data is nothing but it will show, let me find out the OI, okay? So OI data is indirectly showing, so here OI data is indirectly showing whether many contract is created or it's getting destroyed. So it's like a deal with the buyers and sellers, but OI data is mainly will show you whether the seller is there or not, because without a seller you can't buy a contract as a buyer. So seller is very, very important, so that only you can come out with buying. So now if you like, we can go a little bit in depth. If you see rising of OI and the price is rising, the new money is entering inside the long side. So it means that strong upward move is going to happen. So if you see the rising of OI and rising of price data, like the current price data, you can interlink with each other and you can find out something is happening, something is going to happen, the market is going to go up. And if you see rise of OI and falling of price, which is like new money is entering into the short side. So a new short positions are started being established. So soon the market can be like like a little bit like going up, but the rising of OI would be there. same time the falling of price would be there. On that time you can make sure the market is going to fall down. So if you want to find out market is going to go up or down with an options, if you're trading in options, these are all the hidden indications. And next one is falling of OI and rising of price. What it mean? Short is convincing, short is closing the positions during the price is up. Because like for example, as a short, as a seller, what I will do is I know my loss is like more. So in that period, if I'm not having any edge, I will try to close my position. On that time period, this will happen. Price will go up. Lot of, you can see positions are started closing because sellers are closing out and they're just escaping and they're just minimizing their loss. So it means that some squeeze is going to happen in rally. So something is going to be happen in a huge rally. So if you see falling in OI and rising in price, this will happen in a bullish market. It's not like up or down indication, it's a bullish market. If you see falling down OI and falling OI and the price is falling down, long liquidation existing a long or sell closing positions are happening, where there are stop loss hunting is happening or profits are started booking. So it means that the trend is getting weaker. It's going to be range boundary. So you should be very, very careful. If you see the falling of OI and the falling of the current price, it means that it's indirectly saying you the market is not going to go up or down. People are going to sell out and coming out, because if the market is neutral, buyers cannot make profit. Their break even would be somewhere. So this things and all you need to know. Okay, so these are all the things. And next one is reading an option chain, right? Like strike price is nothing but these are all the strike price, like 63,000, 63,200, 60,400, 63,500. So these are all the strike price. And the last traded price is nothing but the current market price used to asset value, the most recent premium paid for the last option. So that's considered as LTP, which is nothing but the last traded price. Bid and ask, I think a lot of people would be highest buying and lowest selling price, which is nothing but the bidding and selling which is happening now, where you can see it on this place, bid and ask price, which is like high and low, which is happening inside the contract. And next one is volume. I said you very clearly, high volume is equal to active buyers are there, and actively a lot of buying and selling is happening. And OI, very well, OI change is nothing but the rising of and falling of rising and falling of the market, which is going to be considered as OI change. And if you want to find out the IV is nothing but impulse volatility, which is nothing but finding out the strike which is going to happen, whether up or down. And delta, theta, and these are all we are going to see, we are just seeing a lot, and you are going to use a lot. So that's all, guys. These are all the basics which you need to know. If you know this, you can be clear with whatever things you're going to do. We can see you on the next video.